Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
The slight delay, just as technology always has fun with you, needed to make sure I had the more stable internet connection, and in doing so landed up joining the masses in the room rather than being on the stage, as it were, and being the presenter. So just had to change a few things, and I'm back again. Interesting session today. Again, I always love Rob and Jeremiah at SAAA for throwing me into these topics that are traditionally face-to-face topics, but we run them as webinars. So I'm going to keep a eye on the question box. And you know, when you're dealing with sort of practical topics and topics that are theoretically simple but practically challenging, it is a fun time on this kind of platform. So let's see how we go. I hope that we have a good morning. The topic for today, and welcome to the first Tech Talk with Caryn. Okay, first off, let's get that out there. What an exciting thing to be invited to do, to have my own series of webinars with SAAA. Thoroughly excited about that. So thank you to SAAA for inviting me to do these things. Always a fun thing to do. But what we are going to be doing today is talking about business valuations. It's an interesting topic to have to deal with, because there are so many places in our lives as accountants that we are asked to do business valuations, whether it is from an IFRS perspective, whether it's from a tax perspective, whether it's from a consulting perspective, and it's the hardest thing we do. It really isn't anything that is easy, because there is no right or wrong answer. Okay, so just to lay that out there is no right or wrong answer. This is an art form. Okay, to do business valuations is an art form and a craft. Okay, so what we can talk today is really the basics of the craft, the core concepts of the craft, the things that you need to be totally comfortable with when engaging with your client to create this science, this art that is business valuations. Okay, so there are a number of us online today. Okay, and each one of us, I know, if presented with the same facts and circumstances, will actually come out. We should all be in the same ballpark. Okay, we should all be within reason of each other, but some of us will be lower, some of us will be higher, some of us will be ranging quite significantly from others. Others will be within a hair's breadth of each other, and we've always got to we've got to be there for different purposes. Okay, whether we're there for tax valuation, accounting valuation, a buy or sell valuation, they all have different intentions, and those different intentions are going to drive different factors in the process. Okay, so this is by no means a linear process. This is by no means a black and white process. So can we just acknowledge that? Okay, that we are going to have to agree to disagree. This is going to be a negotiated final amount that, well, again, depending on circumstances, but we could very well be up against each other in a meeting where you'd be sitting on one side of the table, I'll be sitting on the other side of the table, and somewhere in between is the truth. Okay, and you cannot take that personally. It does not mean you are wrong. Okay, you are just there with a certain perspective. Now, for those of you that were with me when we did ethics a week or so ago, this is where your objectivity becomes really interesting, and the threat of advocacy becomes really interesting, and the understanding how this information is being used becomes critical. Okay, because as much as valuations can be simple, valuations can also be quite an ethical challenge, in that they will test your principles. Okay, objectivity, due care, confidentiality, professional behavior, and there are tremendous threats in terms of intimidation, familiarity, self-review. Okay, when you're working with your own information, when you're doing a valuation on audited financials or on financials that you drafted. Okay, so this is a quagmire of issues. Okay, and then there's the psychological aspect to business valuations as well. When you have got, quite often I've been in the last 2 years, I've had quite a few instances where I've come in after the fact. I've come into situations where small businesses have been bought out by big businesses. And, when everything is looking, these small businesses have been romanced and incredible offers have been put on the table. And they sound too good to be true. And they often are too good to be true in some respects. And you sort of want to say to the person, if you'd sort of consulted with us before you signed on the dotted line, really, we could have raised some concerns. And the problem is when you come in after the fact, when there's a buy and sell arrangement, and the fine print is read, and then there are queries about what is the final selling price, or what is the final purchase price, and how is it going to be paid out, and all of these sort of things are part of business valuations. Okay. And they haven't been hammered out clearly, or people don't have an understanding. I mean, I'm quite amazed that I've had 2 situations in the last 18 months where in the one situation, there was a huge debate and dilemma with a multi-million rand deal on what EBITDA was. Okay, earnings before interest, tax, depreciation, and amortization. And there was a whole debate as to what revenue was. And then people are debating about cost of sales, and people are debating about cutoff and what happens when. And these are simple ideas. These are straightforward ideas, but in agreements and in understanding at who was valuing what and when, there were complications. Okay, there were complications. So what you need to appreciate is that this is, you can have on one end of the spectrum really simplified, doing a fair valuation for IFRS, because we have to fair value an investment, which we have the financials for, and a very simple my area. And my backup router and all my routers are on Vodacom, which is a rather scary thing to have happen. Okay, so I do sincerely apologize about that. It was a moment in any presenter's life. You know how they say about pilots, that pilots start sweating when the fan in front of them gets turned off. Well, as a presenter, we start sweating when the internet towers go down. But I'm back and it's all good. So that's awesome. Okay, so as I was saying, it's a really tricky thing to do. So when we look at what we're doing here, okay, with business valuations and just getting onto the nuts and bolts about it, we've really got to ask ourselves what we are valuing. Okay, and there's a build up to this. Now, often I treat business valuation slightly differently, and then I break it down a few steps back. Okay, because when we're looking at valuing a business, there are blocks to businesses and there are blocks to things that we value. Okay, so I want us to take a few steps back in the process. I don't just jump straight into the whole bang shoot. Okay, so as I mentioned before, when we are looking at a valuation process, but the overall objective, regardless as to what led you to sitting down to put pen to paper, is that you're trying to determine the worth of a company, okay, or the worth of an entity. We're trying to look at price. Now, that is going to be, at the end of the day, a negotiated price, because it's a willing price between arm's length transactions. It's going to be a negotiated price at the boardroom table. And for most instances, you will either be on the buyer's side or on the seller's side. You're going to arm them. If I'm going in for the buyer, I'm going to say, well, go at the bottom end of this range. If I'm going in for the seller, I'm going to say, go in at the top end of this range. And then it's up to them to duke it out, box it out, and find a negotiated range somewhere in the middle. Okay. So whether you're selling off a company or part of a company, applying for a loan, looking for investors, breaking up a partnership, trying to expand your business, trying to bring people in, whether or not SaaS is asking for valuation for CGT purposes.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.